Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, January 22nd. We're looking at the SPY ETF's market profile here on Window Trader. And interesting day, as this morning, it looked like pre-market, they were attempting to take out the bottom of the two-day balance. I told you this morning in the video, B-shape for long liquidation. Well, we never even got close to the overnight low or the balance low, nor did we get the overnight high. We do take out both sides of the IB. We go out with a price probe only to do basically what M period did yesterday. M period got very close to taking out L's high and reversing. Well, today they did, and actually had a small short and gave it up, and boy, just watch this flush. So shame on me on that. But a good day overall, a good week. Let's go over all the indices here on Window Trader, and then we'll do the charts also with them to recap the week. Russell, IWM, gaps lower, only to basically one time frame up all day except for C and J, which turns out to be an afternoon pullback low. Go out with a trend day late in the day. You talk about where change took place. They were one time framing up from D period. J flushed out some week longs. Get an afternoon pullback. That's where the POC ended up. That's kind of rare, right? We talk about that, to have an afternoon pullback and a POC at the same price, even though it was only 6 wide. And then K takes out the day's high and does not look back. 2 sets of single prints take out yesterday's high, and probably the only thing that saved it from going to an all-time high was the bell. So very, very impressive finish for IWM as they end up with overlapping unchanged value, both sides, after starting lower on the day. They didn't even get close either to the bottom of like a 6-7 day balance and get to the top of it now. And actually, I just realized they almost had an outside day up, but it looks like they settled inside yesterday's range. So they took out yesterday's low on a big gap, only to fill it and take out yesterday's high. Almost had an outside day up, but they closed inside of yesterday's range, even though they took out the prior day's high. Triple Qs muddled along. Now, they never took out yesterday's low. In fact, they never even took out yesterday's afternoon pullback low. So they're one-time framing up still for 3 days. Their gap is still the main focus. Inside day does not stop the one-time framing up. They had a perfect POC for a long. In fact, they might have ended up with one. Let me see. Nope, 12 wide. That's 13 wide with N. They never got back to C's high. They end 12 wide. They end with an inside day. So it should be a nice opportunity on Monday when we come out of it. Either way, the NASDAQ composite did hit another all-time high today. So again, just like in the past, where the derivative, the triple Qs don't get it, at some point, I'm sure they will. Now let's get to ES and SPY. We open on a gap lower. Got into the single prints. We filled one set from the 20th. Never filled the second. Our value ends overlapping the lower after being lower. I had a good day. I had a rough start. Well, it was my fault it was a rough start. So let's go over what I did today and then what's going on. So A opened up. It was going back and forth through the opening with an incredibly tight range. I said, well, if we get below the opening, I think we're going to stretch that range and at least fill these single prints and see if we test the bottom of the balance and the overnight low. So when we got down below the opening, I was going to take a 50 lot. Thank goodness I only took a 20 to start. Took a 20 lot put play to start and right away got back. Now, where I should have gotten out is wherever A's high was at that time, and I didn't. So not only didn't I get out, as the gap got close to being filled, I added to it. Now, when B period opened, it took out A's high and filled the gap. I said a lot of times that's all they want to do. I took a size, actually in A period. Let me rephrase that. A period went up. Before it filled the gap, I added size where I was long 160 puts, but most of it was added right at the top. It came in where I took off 100. I could have taken them all off basically basically losing pennies or unchanged. I held on to 60 and then it went right back up. So when B took out A's high again, now he's in the hole again, pretty good on those 60. I added, when B took out the gap, but wasn't getting extension above A's high, I was like, well, we have lower value. Maybe that's all they want to do. I added 100 again. And lo and behold, it came back. And I took them off actually for a profit, not a lot of profit. But if I had held them, I would have had a lot more profit because we came back down even more. But again, I was fine with that. We actually came down and took out A's low, obviously. So it took a lot of mental reserve out. It would have been a much better trade. Take the 20 off that I was wrong when it took out A's high at the time. And then I could have taken those large plays up here when they weren't getting extension. And I would have made a lot more money on it and had a lot better mental reserve capability. Anyway, it worked out. I made money. Did nothing in B, did nothing in C. I was like, you know what? I can't believe we took out A's low, we took out B's low, and we can't even fill these single prints. I'm like, man, these sellers are weak. So good thing I didn't short down here. I didn't go long, but I didn't short. We were back and forth through the opening. I did take a short in D, a small one, to see if we were going to hold the one-time framing down. As soon as we took out C's high, I got out of it for a small loss. It was the only loss I had on the day. Then I said, well, things are changing here. Little nuances. We didn't get back to the opening. We're raising the POC. So when E, actually, was it E? Yes, E. I said, if E takes out D's high, we should test the opening. It took it out. I didn't get on board right away, but it gave me an opportunity. It backed up a little bit, got long with the 382.50 calls, which paid very nicely as I took small off when we got B's high, took small off at G's low, took small off, the rest off at value low. Turned out to be a nice trade. F period. Takes out E's high. Didn't look like it was going to have single prints. Took a short. The 386 puts. Those worked out. Now, I was looking for a flush because buyers weren't getting much in E, F, and G. So H took out G's low. I did not get short right away because a lot of times they take it out and then go back, push up. And that's what it did. And that's when I took the put play. It was a small one. Should have taken a much larger one because we came down, we finally flushed and did okay on that. And then the last trade I took was M. We kept getting either poor highs or we would pop and not get much. I took a short when M popped L and got nothing for it. Again, it was sitting there. I took it off for pennies, and then the flush happened. Would have been a good trade. But it was a good day. It was a very good week overall. No complaints to start this month of January. Let's go over destinations, and then we'll look at all the charts. So upside. They have SPY closing at 382.88. So we're up a little bit over $7 for the week. So our first destination is F's low on the upside, which is 9 wide. And that's 383.28. Then we have today's high of 384.08. Then yesterday's high, which is now a weekly high. The all-time high is now a weekly high and a poor high of 384.95. And then the overnight high of 385.30. For the downside now, just like yesterday. Oh, no, not yesterday. I'm sorry. We didn't have that. We did go out with a price probe. Even though we closed way below it, I'm still using L's high to see if it's accepted or rejected. Of 383.91. We closed $1 lower than there, right? Just about. Yep. In fact, over $1. But I'm still using it. We'll see. Then we have today's low of 381.84. So, again, $1 low from where we closed. Again, these reference points are all over the place. Then we have the single prints, 381.83. 381.83 get filled at 60 cents. Then the lowest accepted price, 381.34. And then the daily low of 380.69 and filling the gap at 379.23. 146-point gap from the 20th. Let's go to the charts. We'll start with the SPY, and then we'll go to the Russell and the triple Qs. So, give me 1 second. Little recap of the week. Here we go. So, 1 week to go in the first month of the trading year. Monthly is one time framing up, 3 months, very healthy out of an inside month. All systems go right now. Weekly. Inside week up was successful. We're up in the weekly out of an inside week. Healthy. Daily. 3-day balance. We're in balance in the daily. It's a very tight balance. 384.95, the all-time high, is the top of it. 380.69, Wednesday's low is the bottom of it. So, again, the way I tell you all the time, whichever way we come out of this three-way balance, we should get our next direction. If we come out of the three-way balance to the 3-day balance to the upside, we see new highs. Come out of it to the downside, we should fill this gap and get acceptance back into this 8-day balance. Don't forget, there's a lot happening next week. We have some big earnings starting next week, including Apple. And we have the Fed Wednesday. The Fed runs this market. So, yes, Apple's earnings are important for Apple. But as far as the overall market goes, the only thing that I care about since I trade the S&P 500, I know they're a big part of it, Apple and Tesla, but overall is the Fed, plain and simple. The Fed runs the market. So what happens Wednesday, not only with the Fed decision, which is most likely going to be nothing, but their press conference afterwards. Now, let's go to Russell. Everybody's waiting for the Russell to just roll over, right? Monthly, one-time framing up, 4 months. Healthy. Weekly, one-time framing up 2 weeks out of an outside week up. Now, we did close inside last week's range. We closed at 215 on the nose. Last week's high was 215. So right there. But it's healthy and a very, very strong finish today on the daily. But look at this weekly chart. Is it getting stretched out? Of course it is. But are you going to try to pick a top? Like I said before, 3-4 weeks into this, people were probably saying, it can't go higher, it can't go higher. Markets don't go bull bear. You need to get balance. Until you get balance, either be long or stay out of it and wait for the market to get two-sided trade. It'll happen at some point, but I wouldn't fight this right now, even though it is getting stretched out. And then on the daily, we do have balance in the daily. Without a doubt we do. We almost had an outside day up. So right now the Russell is in balance for 1, 2, 3, 4, 5, 6, 7. We'll call it an 8-day balance basically. So that's what you have to look for. Look at today. We took out yesterday's low. Looked like we were going to get the bottom of the balance and possibly start getting movement to the downside. And look where we closed. So the longer time frames are absolutely up in the IWM. The daily is balanced. So we're going to have to do the same thing like in SPY. You take out the bottom of the balance, then you can start being short and looking for some weekly lows to get taken out. But until that happens, you might take this out to the upside and keep going. Look, do you care if you miss this week's low or this week's low? You shouldn't. You shouldn't, because at least if you take out 1 or 2 weeks lows, you might get acceleration and take out a bunch of weekly lows. That's what you have to look for. And then in the triple Qs, they're more like us. One time framing up 3 months out of an inside month, healthy. Weekly, inside week up, healthy. And the daily, they're better than us in the daily. SPY is in a 3-day balance. Triple Qs are still up. It's an inside day. You can call it balance if you want for 2 days, but we are one time framing up 4 days. Whichever way you come out of this inside day is going to be important. To the upside, you see new highs. To the downside, it puts us into balance. Again, next week is the last week for SPY, for CamelbackTrading.org's $20 a month voice channel room. It goes to $30. Once you're in for $20, you always stay $20. The annual goes from $200 to $275, and consultations go from $75 to $100. So come in to a room where there's great traders in the room that offer excellent advice, along with my play-by-play throughout the trading day and the market profile being streamed live all day. That in itself is worth $20 a month. Have a great day. Have a great night, a great weekend, and we'll speak prior to the opening on Monday.